Welcome to our Q3 2024 market update, where we'll give you a brief overview of the latest macro and market performance, with an emphasis on smaller companies.
Let's start with the numbers. After a rocky second quarter, small-cap stocks made a roaring comeback. The Russell 2000 index surged 9.3%, outperforming its large-cap counterparts, the Russell 1000 and the mega-cap Russell Top 50, by a healthy margin. But it wasn't just a US story. Globally, the MSCI International Small Cap Index gained 8.9%, outpacing large-cap global indices. Now, what's interesting is how these gains played out. July was the star of the show, with the Russell 2000 leaping 10.2%. But things cooled off in August and September, highlighting the volatile ride that small caps often take. That said, even with this ebb and flow, the message is clear: small caps are rebounding. And then, there's the big headline of the quarter, the Federal Reserve's 50 basis point rate cut in September. This wasn't just a routine move. It marked a pivotal shift in US monetary policy. The Fed is now clearly signaling its focus on economic growth, and that's a big tailwind for small-cap stocks. Historically, small caps have thrived when the Fed cuts rates, benefiting from improved liquidity, cheaper borrowing costs, and greater access to capital. From a sector perspective, financials stole the spotlight, particularly banks, which were the biggest contributors to small-cap gains. Why? Banks tend to benefit from rate cuts, and this quarter was no exception. Healthcare and industrials also had a strong showing, with companies in these sectors taking advantage of the more favorable borrowing environment. But energy lagged, continuing to feel the squeeze from weaker demand and falling commodity prices. What's more, history shows that small caps have a habit of performing exceptionally well following rate cuts. Since 1957, small caps have consistently outperformed large caps in the months following a Fed reduction in interest rates. With inflation finally cooling and the Fed adopting a pro-growth stance, the pieces are in place for small-cap leadership in the months ahead. On the global stage, there's plenty of momentum building as well. China launched a significant stimulus package in September, further fueling optimism in global small caps. Markets in Europe and Japan also showed signs of strength, supported by improving economic data and lower rates. For investors looking at small caps, this combination of global tailwinds is setting the stage for long-term growth. Let's not forget valuations. Small caps are currently trading at some of the most attractive levels we've seen in years. The Russell 2000's price-to-earnings ratio is well below its 25-year average, and relative to large caps, the discount is near historic lows. This creates an incredible opportunity for investors looking to capture long-term value. And here's the kicker: history tells us that when small caps underperform for extended periods, like we've seen recently, the subsequent returns tend to be impressive. In fact, after periods of 3-year underperformance, small caps have delivered above-average returns 99% of the time in the following years. So, what's the takeaway? The third quarter brought small caps back into the spotlight, supported by strong returns, a favorable Fed policy, and attractive valuations. While large caps still have the upper hand for now, we believe that small caps are poised to deliver some of the best opportunities in the market as we head into 2025. Thank you for joining us for the Q3 2024 market update. Keep an eye on small caps. This could be the moment they reclaim their leadership in the market.